Hello, my name is Steve Bigelow with the Candlestick Forum. The market has now produced a more decisive trend direction. Over the last few days, we saw the Dow was trading positive after some bullish signals off the 50, but you can see what it did today. A big bearish engulfing signal back down through the 200, but more importantly, it failed the recent highs. At worst, or at best, even if this is in an uptrend, it's not going to be a very powerful uptrend. But the confirmation was also the fact that the S&P 500 opened right on the 200 and sold off hard, doing a big bearish engulfing signal, obviously failing the 200 and the 34 and the T-line and the 50-day moving average. If it opens lower, pretty much can tell wave one, wave two, wave three would now be in progress, meaning more downside. Also amplified by the fact that the NASDAQ yesterday opened at the 50 and closed lower, failing at the 50, closing back below the T-line. What could have been a bullish Morningstar signal did not confirm. Today, they tried to open it up again, failed at the 50. And traded much lower, back below this support level. Another indication you might have a wave one, wave two, wave three. Now, what's more compelling about all these signals is that they're all moving in the same direction. That's a lot more evidence that the bearish sentiment is across the board in the whole market, meaning more downside. Now, with that, we can produce some high probability option trade factors with candlestick patterns, which we've been doing using the dumpling top. Just visual common sense says if the market is drifting lower and you've got bearish patterns, that just improves the probabilities of big moves to the downside. We saw that on Twilio, where we saw a bearish engulfing signal after in a downtrend, came back up, failed at the 50, gapped down. And so this is where we ask ourselves, this is where we kind of ascertain that it is better to put on puts right here. But down here, we might be putting on put spreads because even if things head lower, they're still in a higher risk area. So you're going to make some good money buying puts just as things are turning over and having your risk modified a little bit by putting on spreads at this level. Now, the reason this is allows you to be staying with a trade, even though you see some bullish days, is the T-line rule. Basically, it says as long as you can't close above the T-line, you're still in a downtrend. That would have been a bad hair day for shorts, which it was. But it needed to open positive and trade positive to tell us that there's been a trend reversal, but there really wasn't a signal here. Notice this was not a bullish engulfing signal. It actually opened a little bit higher. Those type of details are what the Japanese rice traders provided for us to tell us what's exactly going on in investor sentiment. If there's not a reversal signal, be a little bit more cautious of that uptrend not being an uptrend. Now, the reason this is so comforting, that T-line rule, is because as long as you're trading below the T-line, the probabilities are extremely high you're in a downtrend. That takes out your anxiety factor. And this is being professed by somebody that was the worst investor in the world before candlesticks came along. Didn't know when to get in, when to get out. Now we've got a very clear roadmap of what's going on in investor sentiment. So we can add 2 plus 2 together. We recommended shorting Spotify today because look at your dumpling top. What do we expect coming out of a dumpling top? A strong price move to the downside. Notice yesterday they gapped it down and did a bearish kicker signal, one of your strongest candlestick reversal signals. With that, what do we expect coming out of a fry or a dumpling top? A strong move to the downside. What illustrates that fact? A very strong sell signal, meaning we could have a lot more downside coming down into this range. So everything that we put into our analysis is based upon where are the signals occurring? Are you still below the T line? And what type of pattern are you setting up? This allows you to put on very profitable trades. Look at our gap down best friend on Para. We recommended going short on Para today. Right here, you might have bought puts. Right here, you might be buying put spreads. So there's very simple logic utilizing the candlestick signals and patterns and putting on very profitable trades that modify your risk but greatly enhance your returns. So we're going to be going through that in a full day training this Saturday, showing how to put the appropriate option trade with the appropriate candlestick pattern. That'll be it. We'll see you in the chat rooms.